Beyond Meat sizzling hot today, the stock jumping 9% to bring its weekly gain to 41%, and that is its best week ever. A few factors driving those gains: supply chain disruptions weighing on traditional meat manufacturers, and Beyond announcing this week's plans to enter China through a partnership with Starbucks. So I go to BK because you're a chief alt meat correspondent, having extensive experience with both Beyond Meat as well as Impossible Burger. But do you buy all these sort of tailwinds for this stock?
I mean, so one, yes, as you know, I did a 7-day vegetarian challenge. And so I tried both the Beyond and the Impossible Burger. I just have to say Impossible's much better. The Beyond Meat, when you push it down on the grill, it just smells. It's not good. But nonetheless, in this environment, I think this is a trading stock for this environment, right? It's got all these tailwinds. Everybody's looking at it. Up 41%, it's hard for BK to buy it. But on pullbacks for a trade in this environment, I certainly like it.
I mean, up 41% for the week, Jeff Mills. I don't know where you stand on this sort of sector. I mean, in theory, if there's a meat shortage, Beyond Meat can still crank out meat as long as there is pea protein available in this world. And that supply chain is still good. I don't know. People are at home. Aren't they eating like frozen French fries and frozen pizza and things like that?
I mean, I am. If this is all about the meat shortage, I don't know if you didn't want fake meat before, I don't know if you want fake meat now. I don't necessarily want fake meat now. And I know there's the whole question about, is this healthy, is this not? I don't know if that debate's been solved, but I think for those looking for a healthy alternative longer term, the jury's still out. And if you just look at the stock, it is interesting. I mean, it's up, I think, 85% this month. And today it touched, as Carter would say, to the penny, its 200-day moving average and failed there, closing at, I think, 109, the 200 days at 113. So technically it failed at an important level today. So just given the run it's taken, and like I said, I just don't know that long term the meat shortage is something that's going to drive the type of demand at these valuations.
Right.
It's not a stock I would be chasing here. They're doing some good things. The partnership with Starbucks and trying to get into China, I understand that, but I just can't get behind the valuation here, especially after the dramatic move it's had.
Guy, I go to you, and I feel like we should put up a disclosure because you had a terrible experience with Beyond Meat. And so that experience might actually influence the way you perceive the stock. But if you can try and separate your experience with the stock and give us your opinion on the stock, that'd be helpful.
I could absolutely separate my experience. I'll say this: I would not insult my barbecue by putting a Beyond Meat burger on it, BK, but that's neither here nor there. What I'll say is, despite the problems I had post Beyond Meat, I think this stock's going to trade up to the January 21st high of about 130 or so into earnings on May 5th. You have a big short interest in their tailwind. So it's one of these names I think people want to get in the way of, and there's going to be an opportunity. I just think it's going to come in the form of 130, not 109. But if you want to hedge, or if you want to sort of double lever that, I'd be long KMB on the back of it, Melms.
We were playing the video of our Beyond Meat taste test, Tim. I know you remember that very well. It wasn't the video of the consumption of the alt meat that was the problem. It was something that happened later that we luckily don't have any video of, Tim.
Yeah, well, thankfully, and we seem to spend too much time talking about this kind of stuff on this show. So I'll talk about, I think this actually has COVID-19 headwinds. I mean, people talk about, meat shortages and whatnot, and that is something that we are not going to have much past this. There's no way there is a response, and it is a classic ag story, commodity story. But look, 51% of their revenues are coming from food service. So if anything, they have a headwind right now. People are not going out. So the dynamics of the same things that are hurting all of these fast food chains or all of these restaurants are the same things that should be hurting this company. Then when you get back to normalcy, you're going to see this valuation makes no sense relative to the competitive landscape. So after this move this week, you especially don't touch this one. I wouldn't short it because this is dangerous on short interest,
right.
But it's not necessarily all about a tailwind.